Hello there, apes and apettes. Thanks for watching the Breakdown channel, where today we're going to show you how you can make money from your AMC, GameStop, and other stocks while you wait for the big squeeze. You probably know that right now the hedge funds are kind of in a pickle because they can't really close out their positions because they'd go bankrupt, but they have to pay a certain amount each time to short the stocks. Whereas you as a holder just have to hold your stock. But we're going to go one better. Not only do you just have to hold your stock, we're actually going to pay you to hold your stock. And it's going to be so lucrative that within a year, it will actually probably pay you back the entire cost of your stock for your entire investment. Now, this isn't a scam. This isn't clickbait. This isn't some trick. It's actual financial strategy. A quick disclaimer, I'm not a financial advisor. This is not financial advice. I'm just showing you techniques we use and doing some financial education. So, without further ado, let's get to it and let's make some money. All right, are you ready? Let's get started. Now, the harder work we're going to be doing is involving stock options. You may have heard of stock options. You may have heard they're complicated, they're risky, and both can be true, but the way we're doing it, it's easy and it's a fairly conservative approach we're going to take, as you can see. Now, those of you who are familiar with stock options and are kind of pros in the business, just bear with us for about 5 minutes or advance the video forward because we're going to talk to some of our viewers that maybe aren't that familiar with it. So to start off, we're looking at the Yahoo Finance AMC screen. Today is October 21st of 2022, and AMC closed $6.35 today, and up 3 cents after hours. So if you have 1,000 shares like I do, that means my investment is going to be worth $6,350. So what we're going to do is we're going to go to the stock option chart and see what a stock option is. Now, if you think that you're feeling pretty good about AMC and you think next January that it's definitely going to be over $10 a share, then you might want to buy what's called a call stock option. And a stock option gives you the right but not the obligation to buy a stock at a certain price within a certain time frame. So let's take a look at the options section of the Yahoo Finance screen. And once again, we're looking for January of next year as the strike expiration date. They always fall on a Friday, so it's going to be January 20th. And let's see what the price is for a stock option for $10. We see that it's 68 cents right here, 68 cents a share, which means for 1,000 shares, that would cost you $680. So in other words, for you to have the right to buy a share of AMC at $10 is going to cost you 68 cents a share, which I think is a pretty good bet. So that means, let's say it's January 20th, and it hasn't been a very good few months for AMC, and it's only closing $8 a share at that date on January 20th. Well, that means your investment has gone worthless because who would buy from you a stock option for $10 when it's only $8 you can buy it in the marketplace? So unfortunately, you lost your investment and went down to zero and it's become worthless. However, let's say the opposite happened. Let's say AMC has been on a run and it's gone up to $50 by next January. Well, you can imagine the right to buy a share of AMC at $10 when it's at $50 is actually pretty valuable. In fact, it's worth $10 a share. So you've only spent $680 and you've made $40,000 on this stock option, which is a pretty good return on investment. So you can see some of the attractions that stock options have for people. They can be risky, but they also have great reward if it turns out right. Now, what we're doing is not buying a stock option. Our strategy for you to make money is to sell a stock option. You probably thought only market makers can do that, but anybody who has stock can sell a stock option. The only qualifier is you have to actually own the stock, unlike the crooked hedge funds that do naked selling when they don't actually own it. You have to actually own the stock, and then you can sell a stock option to it. So what I've done for myself is I have bought a stock option. I've sold a stock option for 2 weeks from now, November 4th, where I don't think AMC is going to hit $8 by then. So let's take a look at what the price would be for that. So again, we go back to options. We click the expiration date for November 4th. That's in 2 weeks from now. And we see that if I sold a stock option for $8, that's I'm going to get 25 cents a share in premium. In other words, some buyer has to pay me 25 cents for a stock option with an $8 strike price. So for 1,000 shares, that's going to be $250. So if someone buys my stock option, and by 2 weeks from today, if it doesn't reach $8, then that premium of $250 is all mine to collect. And I made myself an easy $250. That's a strategy we're going to be using to make money from your stock. Now, if it goes over $8, we have some other problems to talk about, but we'll talk about that coming up in a bit. But just so you see the idea here, we're selling a stock option to somebody on AMC or GME stock that we own that gives them the right to buy it at $8. So how would you put on this trade? What would it look like? Well, let's go to my Ameritrade login screen and we'll show you how to put on this trade to sell the stock option. And here we are on my TD Ameritrade desktop version screen. And I'm going to show you how to put on this trade so you have an idea of how it works. So the first thing I'm going to ask you is the underlying symbol of the stock that we're buying or selling. That's AMC. And we click the option chain. That's going to show us all the range of expiration dates. And once again, I'm doing this for 2 weeks out, so that's November 4th. And here we see the $8 strike price. So I'm going to click the first column. And it shows you what the bid and ask is, so you know how much we have to pay. So we have AMC. We're going to do a sell to open. That means we're beginning a sales option contract. Now, when we get the contracts, this is confusing. This throws people. One stock contract is worth 100 shares. So don't make a mistake if you want to have 1,000 shares or putting in 1,000. It's going to be 10, and 10 contracts equals 1,000 shares. If you make a mistake, that could be really deadly. So be careful about that. Expiration's November 4th. The strike price $8. The limit, we'll say a price of kind of do it in between there. So do 25 cents a share, and it's telling you that you're going to it's going to put $250 into your investment account. Now that may fluctuate. They may take some away as the 2 weeks progress. For example, if AMC suddenly goes up really sharply Monday to, let's say, $7, then the option price is going to go up, and it'll show you that you're losing money temporarily. But things will smoothen out over 2 weeks. And assuming it doesn't reach $8, then that $250 is yours to keep. You keep the premium, and you made yourself some money. Now, $250 doesn't sound like a big amount, a big deal, when your total investment is $6,325, but it's actually about 3.9%. Let's figure out the exact return on investment on that. All right, let's figure this out. So you're making $250, and did that go in? Let me check. 250, and your total investment is 6,325 times 100. So for just 2 weeks, you've made 3.95% of your investment. Now, so that's 2 weeks. So that means that there's 26 2-week periods in a year. So let's multiply that by 26. That's almost 100%, over 100% investment. In other words, if you do this every week or every 2 weeks for the year, you're going to make back your entire stock investment just by this move. In fact, if you actually are smart and use compound interest, where you take the money you get and buy more and keep on taking those investments and building it up higher and higher, it's almost going to be double your investment. So what seems like a little bit at first really can turn out to pay for your entire investment in your stock. All right, before we go on and show you some of the risks with this play, just a few things I want to mention. First, I listened to the earlier part of the video, and I see I made a mistake when I said that the AMC stock went from 10 to 50 and you made $10 a share. That's wrong. If it goes from 10 to 50, you've made $40 on your stock option, and since you've bought 1,000 shares of stock options, that means you've made $40,000. Now, if any of you watching see any mistakes I made with my math, please enter in the comments. I'd be happy to see. I'm not a complete pro myself. This happens to be my very first YouTube video, and probably a year from now I'll look back and listen to this and cringe, but I think it's important for everybody to take a first step and just do it, and hopefully things will get better and get smoother as we go on. But it's kind of a model to you too, so it doesn't have to be perfect. Just get started, get it out there, and see what happens. All right, so let's go into some of the potential occurrences, what can happen as a result of doing this play. All right, scenario number one. You sold an $8 stock option and the price of AMC goes way down. Well, actually that's good. Now, it's not good that the price went down, but it would have gone down anyway because you're holding the stock. But you've won the entire premium from the buyer. So you've made your $250 from the play, so it turned out to be a good move in retrospect. All right, scenario two, the stock goes down a little bit. Maybe it goes down to $6.10, $6. It's still good. It didn't hit the strike price within 2 weeks, so you collect the premium and move on. Scenario three, it stays the same. In 2 weeks from now, it's still at $6.30. Well, that's still good. It did not hit the strike price of $8. The premium is yours to keep. Take it. Do not pass go. Have some fun. Go a night in the town. It's yours to keep. Scenario four, it goes up a little bit. And that could be either a break even or a slight loss. So that your break even point is going to be $8.25, the $8 strike price plus the premium of 25 cents. So if it reaches $8.25, you're good, you've broken even. If it's around $8, you made a tiny bit of profit. And if it goes up to $9, you maybe lost a little bit on the play. Now your AMC stock's also going up to $9, but you have to give a little bit of that profit and depreciation to the buyer of the stock option because he's entitled to that. Scenario number five, okay, here's where you have to pay attention. The only bad thing that can happen is, suppose AMC goes up in a day really fast, like it starts today at 6 and it goes up parabolic and it ends the day up at 40. There's the problem because even though your AMC stock has gone up that much, you have to give that appreciation to the buyer of the stock option. So in other words, you've kind of lost out on the MOAS or the squeeze for that day. So that's the only bad thing that can happen. You have to be very careful. Now there's two ways around that. There's two ways you can be careful. Number one, don't put stock options on all the shares you own. So let's say you own 1,000 shares. Maybe just buy stock options, sell the stock options at 500 shares. That way, if God forbid there is a MOAS in the day and you miss it, you still got that other 500 shares that you can completely keep the appreciation on. The other thing, and this is important to stress, is you can get out of this play anytime you want. All you do is you just go to your Ameritrade or your Fidelity, whatever, click your position and just click close position. So anytime you feel that the trade's not going your way, maybe you've changed your mind, maybe it's things are not what you thought, just buy back the stock option and you're out. So you're not stuck in there. You can get out anytime you feel like it. So that's, you just have to be careful. So you know that, now let's say the MOAS and squeeze happens, but it happens over a month or so. That's still good. After the first day, you see this squeeze is happening, just buy back the stock option, you're out, and just participate in the squeeze and you're good. So you just have to watch things every day and make sure that it's not going to go up, and you don't want the MOAS to happen or the squeeze and find that you've been left out. So that's the only possible scenario that can happen that may not be good. So that's the end of our little lesson on how you can make money while your AMC, GME, or any stock that you own sits there. And if you, like me, got into this AMC play maybe last year around January, by now we could have been sitting on maybe $14,000, $18,000, $20,000 from selling a stock option. But I think there's still going to be some weeks, plenty of weeks, where it's going to sit there until the final squeeze comes. So there's still plenty of opportunity to make money. If you have any comments, leave it. We'll read every one. If you got anything out of this video, please subscribe. There's going to be a lot of more fun ones coming up. We're going to show you how to make more money with other ways, and also have some fun too. We're going to be talking about entertainment and some great things about movies. So I appreciate you watching. Sorry about the little amateurish quality, but this is my first YouTube video, and they should get better as we go on. And I wish you success. Hope you make a lot of money, and we'll talk to you soon. Bye.